All right, so in the Documents tab, let's see, the unabridged version. And then I'll explain why this one's going to be different from what goes out to the rest of the world, which we're going to wean this off anyway from the rest of the world. Okay, so in the Documents tab for members, as well as if we've done it right, you can go to the Weekly Thoughts, open that up. I like this Peter Lynch comment. I finally decided not to give one of my famous comments, but I did a Peter Lynch comment. Probably one of the worst investments I ever did in my life was give a friend of mine 25 grand in 1986 who was a stockbroker, and he put it in this little fund. I gave it to him, I think it was in May, and by July it was down to $14,000. And I said, you're an idiot. And the long and the short of it is, Eric begged me, don't get out, don't get out. I said, man, I couldn't lose 11 grand in 90 days trading commodities. This is ridiculous. And he begged me, don't get out of this fund, don't get out of this fund. The fund manager is great. It's just a short-term correction. And I said, yeah, right. I was trading bonds, and the long and the short of it, it was Peter Lynch's Magellan Fund. Don't want to tell you what happened to that fund after a time being, but I think in like the early 2000s, like 4 or 5, figured out it would have been worth about $2.7 million or something stupid like that. It was, they closed the fund down. But Peter Lynch was pretty smart, and I do like, you know, this, whatever method you use to pick your ultimate success or failure depend on your ability to ignore the worries of the world. Or I think in his time, they didn't have the CNBC, which we talked about in our seminar, and all the numbnuts on the world that talk stuff that gets in our heads if you listen to it. You got to allow your investments to succeed, and I can translate that to my own methodology, which means you got to give the trade time to mature. It isn't the head but the stomach that determines the fate of the stock picker. I think a better way of rephrasing that would be it's wait to the close, you know, and sometimes your head between the open and the close, you know, you get that discussion up between the left and the right ear, and you maybe start focusing on, well, what's going on with the market? And you only have to focus on one thing. Just wait to the close. If it's a weekly trade or a longer term trade, wait to the close of the week. Anyway, and that takes a little bit of guts to be able to just turn everything off and follow through with your overall analysis. Trust your analysis. Anyway, we'll scroll down here. I'm going to just get to the meat and the potato of it. This was actually a stock brought to my attention by an individual in the room, Wesley Cavium, and I like the space and I like the technicals. This is a bank stock. So what I've done is, if you take a look at where these, I'm looking for pullbacks. So I'm looking for pullbacks, and Northrop Grumman NOC. I mean, we've got some expensive stuff. We got some cheap stuff. We got Tesla in here. I think sometime during the week, if we get a pullback in a lot of these things, BABA, for example, I've got all types of good stuff. JCPenney's, big worries there with JCPenney's, to be honest with you. We'll take a look at each one of these names, even Qualcomm, QCOM. Now, if the market trades near these price levels, look what I've said. This week I thought I'd give it, and this is from now on, we're going to not have this in the weekly email to the world. But I think what we can do is look at some high probability setups if it gets near these levels of support for this week. So I ran a scan on a bunch of stuff. This is, I think, I would say even JCPenney, I'm not looking for the next 90 days. I've given a target, or excuse me, 60-day target within the next 2 months. So that would be just beyond or near the July option expiration. If the market is going to show strength, the overall market, I think these are some winners that we could sink our teeth into. Couple things that you can do. The market, if these stocks trade near those supports, then you can, option traders, implement maybe bear put spreads or a proper long directional strategy using some of my methodologies taught in either the option course, some of our mentoring, and what we discussed a little bit in this weekend's seminar. So as a review, I still see more downside coming in energy stocks overall, as well as I think the social media names, even though they may have been overplayed to the downside, I may have been a little overzealous in suggesting like the support of 1650 in Pandora. The support might come closer to like 17 and a quarter. Pandora support Yelp. I don't think 34 is going to happen. Twitter 32.50. I don't think it's going to happen. LinkedIn 178. I don't think that's going to happen. But within, let's call it a 0.5 to 1%, I think is within near, and that's what near might represent. This week we have all kinds of economic reports on housing, new housing, existing housing, home starts, house index. We've got a Fed speaker, which, to me, as I always explain, when we get into Fed speakers, listen, it doesn't matter. I think the media makes a big deal whether they're a voting member, which is important, or they just say stuff, which bottom line, they have influence whether they're a FOMC voting member or they're just a Fed member. There's a difference. But in either case, they still make the markets move. And for day traders, if you have a 6 or 8 tick stop in an S&P, these guys can make the markets move 12 and 15 ticks. So you just want to make sure that if you are day trading and you have a position on, knowing that there's something coming out at that specific time that can cause a quick spike, hit your stop, knock you out of the game. That's why it's important to understand what's happening on as far as the reports. And that's why I really included. Otherwise, what's really important is Janet Yellen. And she's speaking Friday at 1 p.m. Apart from that, you have a few economic surveys like Philadelphia, Chicago, but I think we'd be interested in hearing about nationally how existing home sales are doing. And that would tell us that people are doing what? They're moving. And people move because they need to flee a state like Illinois because they're tired of taxes and they're tired of actually the number one reason that people in the top 5 states that people wanted to leave, according to the Washington Post last year, no joke, folks, the top 5 states was something like Maine, Vermont, Rhode Island, and Illinois, I think, was either number 1 or number 2. And it was not weather, it was not politics, it was not taxes. The number one reason people were fleeing Illinois was the inability to find a better job or a job in general. And the classifications, there were 5 categories. Why are you wanting to move? So the number one state people were fleeing from, abandoning, was Illinois, was a lack of jobs. That was I thought it would be taxation because the taxes between real estate, state income, sales tax is just insane. But needless to say, I think existing homes, if that number picks up, if existing homes picks up, it might show that there is some leniency or flexibility, and we're starting to see banks, at least the requirements for lending maybe easing a little bit, and if existing homes kind of move, that's a good thing. Housing starts obviously creates new jobs, and that's kind of important. So housing starts is going to be kind of important, and I'm not really expecting a big number on housing starts. Housing index, this I think is more in tune to what the value of homes are. So as you can see, I've just outlaid, Monday, Tuesday, and Thursday, something to do with homes. So that I think we've got Chicago, we've got Philly, we got Kansas City, so we've got a bunch of Fed business surveys, and then for earnings, if you, after the bell, Take-Two Interactive, Urban Outfitters, Agilent is A, and then look through some of this stuff. We got some neat stuff. We've got more bigger retailers coming out this week. Remember last week's thoughts and observations? I said I'm looking for some downbeat numbers from like some of those major department stores, and I, just go back and review it. It's in the document tab. That's the neat thing. You can go back and you can back test what we talk about. So we do take accountability for what we put out. And I think this week, though, I'm expecting some turnarounds in some of these numbers, actually, from some of these guys. You got Hewlett Packard, but let me get back on subject. Limited brands, Victoria's Secret. We've got Stage SSI, Stage Store. No one's familiar with that, but it's the parent company for Bealls or Bell's department store. TJ Maxx, Marshalls, Walmart, Home Depot, Red Robin Burgers. We've got Sears. We've got Staples, Target, Lowe's, Williams-Sonoma. They make some incredible brownie mix. I'm here to tell you, I got someone gave me like a pan and a little present from Williams-Sonoma, and they said, I'm like going, really? A pan? And they go, we know you like chocolate, trust us. This is kind of like something you'll enjoy doing with your grandkids. And I went, okay, sure. Anyway, they were right, I was wrong. Williams-Sonoma has a brownie mix that is like Ghirardelli can't hold a candle to it. But anyway, so I know I've increased sales in Williams and Sonoma's brownie mix, just to let you know. We have, I mean, gosh, I haven't even gotten to Thursday, and you can just take a look at those. Ross Stores, The Gap. So we have Ann Taylor. We have on Friday, Hibbert Sporting Goods. We have Foot Locker, John Deere. So there's something here for everyone this week, and I wanted to kind of avoid the landmines, which during the week we'll go through as far as some stock picks for you guys that I thought if we got down near these levels, I like the financials. I like this space, just like Xilinx and Broadcom. I like a little bit of the defense. Tesla, I think, from a longer-term perspective, looks good. So if we get a snapback near these levels, Baba's the same thing. MDT, even JCPenney's in the next 60 days, I think we could absolutely see a breakout. And if we get like Walmart that says something and a couple other things, I think we really could see a move up to at least 989. Qualcomm, if we get a pullback here, if we want to get through a little, volatility in the market, I think Qualcomm, it's a sleeper, and I'll go through some of those names with you guys real quick. So, and then we can kind of figure out, well, what's John's magic mystical powers here? What does he see? Real simple. Let's take a look at USB. USB, weekly, high closed doji. Volume is off the weekly charts, but not the monthly. And the daily gave us kind of like a bit of bearish divergence. So I'm thinking we have a weekly high closed doji in a kind of choppy sideways range in a seasonally strong sector that has longer term. Look at this long shadow that happened from a year ago. Look at these long shadows, long shadows, long shadows. So longer term, there's a lot of buying under the market, which means if we, by chance, if the market wants to be treacherous or tricky, and I'm not saying I'm looking for a huge move down, but 43.59, somewhere right back into this zone right in here, I think it would behoove us to take a look at that for, for the next, and I mean, we're not looking for a huge move. I'm looking for a market to get back up to the top end of this range or possibly a little bit higher in the next 60 days. So let's take a look at CAVM. Cavium, and again, it did not, just missed a weekly high closed doji. However, I like this volume as the market rallied, pulled back. I like the fact that it wasn't quite a doji, but it almost indicates it was a weekly, but not quite. The daily certainly has a decent basing action with a huge accumulation of volume. So just in case they want to smack the world in the face and this thing comes back down to, not looking for a huge move back down. So if you take a look at it, could the market I mean, look at the possibilities here. So if CAVM 6538, somewhere around in this region right in here, if we just came all the way back down and formed a quick spike low, I think that might be an impressive opportunity with a very low risk. All right, next, NOC. So Northrop Grumman, and the longer term volume, this almost looks like a potential continuation. The volume that came off of this high all the way back down, not too great, but the volume that's picking up in just this small upside move, that's strong accumulation, or at least maybe it'll try to come back up here and test this high, which 168, 170 area is fairly reasonable. It actually could get even, to test the high up near 173, but I was a little bit conservative here. Look at the breakout. If I told you this price pattern on the weekly volume, it's made a consecutive series of higher lows and now higher highs. Daily volume, same kind of concept. So if we got lucky, NOC 157, it's not a pie in the sky type of major pullback. I'm just looking for a small little pullback here. I think the risk factor, if it is going to go for this week, this would be pretty nice. Now, you'll notice that in this week, NOC did generate, that's an orange candle there. So it is officially a weekly high close doji. Typically the rules is you buy on the close of the next session open. So if you look at where the market, a view data window, if you look at where the market, I'll bring this into focus for you so that you can see the market closed at 158.01. We're looking at it about, what, 20 some odd cents, just slightly a little bit lower, just hopefully we get a little bit lucky there. This could see some upside. I really do like that weekly volume and the high close doji in NOC. All right, so let's take a look at some of the more popular high flyers. This is Tesla. Now, again, Tesla did generate a monthly buy. It'll be a monthly high close doji, but the monthly volume is, what's the word I'm looking for? Terrible. All right. The monthly overall volume does not look like this stock is going to be sustainable, but it could break out and try to test the highs one more time. And what do I define volume being terrible? The market has came back to its original highs, and the volume is nowhere near it. So there's not a lot of longer-term love in this market yet. Looking at weekly OBV, it kind of shows us that it's a different story. So maybe we just haven't seen a lot of the upside in, which tells me that we could get a short-term pullback. It tells me we could get a short-term pullback. And if we do, I mean, if you think about it, from 248, I'm only looking for a small little pullback to about, what, 239, 240, let's call it. So if it comes back near, the last 1, 2, 3, 4 days range, that's not, it could spike back down here. As long as we hold over that high, as long as Tesla holds over there, I think an intraday, like a Tuesday, Wednesday pullback, might be an interesting setup for you guys. Stops under 228. Target 269. Gee, John, where did you get that idea from? So I'm looking to play short-term pullback and an upside move on Tesla. Next idea is BABA. And BABA, it's already in your notes, and I think that easily BABA has the potential to get back, as even I had mentioned, and I know I talk a lot of things, but I think BABA easily can get to the midpoint up here at, at least the 95, the 96, which is the midpoint of that big, tall red candle we call Marabuzzo, engulfing, benchmark, et cetera, et cetera, et cetera. So I think that'll be first and foremost an area of old resistance in Alibaba would be right up against that 96 in initial. Maybe it goes a little bit higher, but that's just my, initial upside. So I would look for BABA 86.70. I'm not obviously looking for a huge pullback in here. Somewhere just right into that region. We don't have to, and this is for the week, guys. That's what it says. This is for the week. If you don't get a market pullback, if it goes straight up, we just start all over again. Let's look at one last, or a couple more, excuse me. MDT. MDT did form, and of course Medtronics. The short-term, intermediate-term, long-term volumes looking good. This orange suggests, yes, it was a weekly high-close doji. Look at these long shadows in here. MDT, look for a small little pullback. Not a great one, but a small little pullback, which might be reasonable to expect. 75.39, possibly down there. It's a weekly high-close doji. You supposedly buy on the close of the next session open, but it's right at weekly pivot resistance. Moving average are pointing down. So with that said, it hasn't defined a breakout yet. So you have a strong shot that if the overall market has some weakness, we might get a little bit of pullback first. Well, then second to last is JCP. To be honest with you, you got to admit, man, that stock earnings didn't do too bad. They reported better. It was Kohl's. The whole sector moved lower. And the next day, the stock came back. Longer term, the volume is still intact. Intermediate term, the volume is off the frickin' charts. Listen to me. This is off the charts. This really is, in my mind, when you could say that, by the way, back over here, they really loved the stock. The market sold off, and now we've seen an accumulation and more volume. I think this is just going to be a little bit of a sleeper. It could be just a sleeper, but eventually this thing's going to probably pull in. Now, the benchmark, not only was this a weekly high close doji, but it's also a what we call, if you study your TTU material, a benchmark. So midpoints generally offer support, and then you got 1, 2, 3 weeks of dojis with long shadows underneath. If this thing gets some going, I'm telling you right now, we're talking every time we get the market, it pulls up, it gets into that benchmark type formation, and you start to break out, you do see a continuation. And if this market wants to continue, it's going to see maybe just slightly over or near where that moving average crossover is. If I wanted to get a little bit more excited, I would say, we're probably going to get a little bit higher in JCPenney's than 989. We'll probably get around, 1050, but I wanted to be a little slightly conservative on that one. So looking at not just my indicators, candlesticks, the momentum study, the volume, the whole kitchen sink, JCPenney's is still on for the upside. All right, next, QCOM. We've chased this thing, we've played this thing, and QCOM, as you can see, it's had these big red candles to the downside. What this signifies is that Apple has had earnings, and then Qualcomm had earnings like a couple days to a week after Apple, and so they just got punished. It just got punished. But notice that the market is forming, and if I wanted to play a bullish convergence play, guys, this has got a bullish convergence play. We've made new lower lows in price with no major volume behind it, and this is not a 5-minute chart. This is weekly. So we are in a weekly buy. The volume overall, the overall volume has just exploded off the charts, as you can see. And so therefore, maybe this has got a little bit of lag to it, like a little bit of delayed reaction. But when I take a look at the overall trend of this market, yeah, it's hitting some overall resistance. Anyone can draw that trend line, but there's something going on in this market in so far this year that it's getting ready to explode. That's what the weekly analysis kind of shares with me. Let's look at the daily real quick together, and I would say that even the indicators that I have put out, even for going into next week, or excuse me, this week, we are probably seeing, if I could get this trend line going, pretty please. Anyway, what I'm trying to just, uncover here or share with you is that we do have consecutive series of higher lows. The market expanded. It hasn't taken out this high quite yet, or in this level of resistance, it kind of took out the average of those highs. The momentum was not the best when it was down in here, but it started to pick its head up, which tells me that if we do get lucky, the market, I think if we can get like a buck 50 pullback on an intra-week basis, I think that would be a smart play somewhere against the weekly support levels, and of course the this area which was once old resistance, which now should offer new support. So anyway, I just wanted to go through that with you guys. Outlook for stocks still fairly bullish. You can read all that wonderful information that's in here. If you can take a look, the spiders, the Qs, the diamonds, all are still in a buy mode. Ironically, this is not a misprint. The Russell is still in a weekly sell mode. If you look at TradeStation, the Russell is still in a weekly sell mode. I was fairly disappointed on the advanced decline analysis. It on a week-to-week basis did not improve much. The volume did, however. The week-to-week volume analysis on the Russell did improve. But I was looking for and hoping to see, and this, as you can see, a daily chart of the advanced decline on the Russell. I was looking to see this market make a newer high last week. In fact, Friday, the Russell was down. So it's definitely not into, and I was saying, hey, if this thing does spike up based on the volume, there's more volume accumulation, but I want to see breadth participation too. And we didn't get the Russell breadth participation, so it is still in a weekly sell mode. Maybe things will change this week. We'll keep our eye on it day to day. So what does all this other gobbledygook mean? It means the market's still pretty good. The weekly McClellan oscillator is at, it did not. Look at the weekly McClellan oscillator. If you just look at the net changes from that I post to you guys every week, it was positive 35 last week. It ended up only positive 42. Does not, repeat, does not give us the sense that the market is overbought. Well, John, the market moved and made new highs and everyone's all excited about it. Did it get overbought yet on a daily basis? And the answer there is no, it really didn't, because the week earlier it was negative, let's call it 40, and it's only positive 31. And I would say overbought on a McClellan oscillator on the daily basis is in the plus 170 region, 150, 170. So we're not anywhere near overbought on a daily. We're not anywhere near overbought on the weekly. So I think intra-week pullbacks will give us buying opportunity. Therefore, I gave you some stocks to take a look at. So this, I believe, and I hope we get it right, because I'm going to make sure this does not go out to the general public. This is for you guys only. You pay for it, you're getting it, this is it. And I think that we can talk about options when we get down there, set some alerts. But I like these names right in there. I think we've got, again, and then every day we walk in here, we'll see what other type of opportunities we might have, okay? So that concludes our planning and scanning, and I do apologize for the, again, we're 8 minutes into the market opening session here, but I do think that if you're looking for stock and some targets for some option strategies, I think these names at those levels might give you a hand, or even to play these maybe directional for the next 60 days. And again, as usual, we'll go through, just like I've been doing on a day-to-day basis, what I see in the markets for you guys from a trade perspective. Other things, just to take a quick look here. Broadcom continues to outperform. Bank America continues to look strong. Hewlett-Packard has earnings this week. Hewlett-Packard has a huge gap. From a trade perspective, I think for the next 30 days, this earnings is going to, it's going to be a killer. But I think longer term, Hewlett-Packard, I think longer term, here's the problem I got with this. Are we developing a potential bear flag? So is this a bear flag? And if it is, man, it's gonna shoot this stuff right down about measurements about 24. Or is this market just accumulating in here, getting ready to spike and pull up an IBM and get up to around 37? So let's just take a quick gander at that. So looking at the monthly volume, the monthly volume mirrors kind of good accumulation along in this trend. 1, 2, 3. This is maybe a wave. If you think about it, 1, 2, 3, 4. Fourth wave shouldn't get above. If this is an Elliott wave, and generally after the fact, Elliott wave theorists would say, oh, absolutely it was. But needless to say, the moral of the story, wave 4 should not take out the peak of wave 1, which is right in here. It hasn't. The volume is pointing up. This is a monthly chart. So if we do get an upside target, or if this market supports, then volume should look pretty good. And let's take a look-see at volume relative to price. And here's what I kind of like, and this is the setup. All right. So the setup is we absolutely made new lower lows in the stock. I mean, it's right in front of you. But relative to the volume on the weekly charts, no one really wanted to come out of that trade. And in fact, since this low, the price hasn't gone anywhere, but boy, we did see a huge spike or an accumulation in volume. So that if I had to say, well, what is the story? I'd say, well, we definitely have a bit of a volume convergence in the market, number one. And number two, we've got this over the last 1, 2, 3 weeks. It seems that anytime this stock's gotten near this 32.5, it gets sucked up. See the long shadow, long shadow, long shadow. So I'd have to say there is some accumulation, that's occurring down in here. So, this would be a stock for me that I think, even looking at a sideways action, it's still giving me a higher low perspective in the on-balance volume. It could be just a no-brainer, not a big reaction like Cisco did, where it's still bullish, but not a huge reaction. It's all, so this is not a play that I would, it's got upside bias according to my work, and yet it may pull out to be like a Cisco, where it's not going to have huge implied volatility and have a big move one way or another, that kind of thing. But overall, I think Cisco in that space can still see higher moves in the next few weeks, as I wrote about last week. So, and it was, by the way, if no one took the, and I know a lot of you were traveling and at the seminar, thank you very much. It was great to have everyone there. I would say every single stock except for one on our weekly list last week did relatively very well on intra-week pullbacks near weekly pivot support, and then bounced off there between 1 to 3%. So you may want to, if you want to take time and you got, tonight nothing to do and you don't want to see a rerun of the Kardashians, or that's a joke, sorry about that, or after, if you like the Kardashians, after the Kardashians, maybe you could take a look-see and go back and see what the kind of market reaction we had to those specific stocks in that sector. The one sector, just to make mention, that I want to kind of steer clear of still is OIH. For right now, even though OIH might, I think, it's in a longer-term monthly buy, the volume's not that great. I think we could see OIH as the overall sector, oil service sector, until things kind of turn around for it. I can't sell it, but I can't buy it. I'm steering clear of it. The other one is the XOP. So stocks contain an XOP. Once again, yes, it has a monthly buy. Yes, it's kind of pulled back, but right now, it's another sector I just can't stick my, I can't get involved in this right quite yet. I need to see at least a little bit of love. We've got bearish blue below gold. You got weekly sell mode. You got deteriorating volume on a daily basis. Just something I'm not, I can't sink my teeth in quite yet. the XLE weekly sell signal, volumes gone down more substantially than price. It's volumes led. The market has recovered, but not a lot of longer-term volume. So if you noticed in last week's weekly thoughts and observation, there wasn't a single energy stock listed. And so that's probably why we've stayed clear. It was mostly, we had financials and we had technology, which seems to have been the right space to be into, and as well as continue to play on the bullish side. So anyway, let's go to our day trading page and see what else we have. That concludes today's planning and scanning for the week, and give you an idea of what to maybe look for some stocks in specific sectors that still remain strong. And we've taken, of course, the liberty to filter all that for you. And I think that might put us on the right path for some opportunities for some stock traders and try maybe that can avoid landmines on earnings. We will also discuss during the week a few of the stocks that are coming out with earnings and take a look at those and their options matrix, meaning we'll take a look at their implied volatilities, volume and open interest comparative numbers as we move forward for the rest of the week. So that's what we got in store. Thank you all very much. That does conclude Monday's planning and scanning.